Hi everybody, this is Chris from Turning Point Life Investment, and this is going to be an educational video for my YouTube channel. It's going to be a basic thing about support and resistance and how I see them on charts. This is actually going to be raw. What I mean by raw is I haven't done anything before this to prepare for what I'm about to talk about. The reason being is, it is good to go to a lot of places that teach and things like that, but they usually have material that's already laid out and just follow this material. And what I've found out a lot in the markets is that you have to be able to adapt to different types of situations and things like that. That not even everything that you learn you'll see in the charts, and some things will surprise you. So that's one of the major purposes that I made this video for. Alright, well, I got rid of some studies and we're actually going to go in. This is just a chart of FLR, Flower Corp. We can start here. We are looking at past data, but there's nothing wrong with that, and especially when we backtest our strategies. We'll point out resistance right here is about the 53 level, and the resistance under that is about this gap area right here around 51. And our support will be the bottom of this range. Look how many times this range, this $48 level, was tested. 1, 2, 3, 4 times. So that will be holding as support. Now, what do we do from this? Well, we know that this is first support right here at 48, and there's first resistance at 51. So we know that if the market closes under 48, it should make a new low during a sell-off. If it gets above 51, that's actually a bullish sign, and it can move back up to 53. So we'll move up. Okay, that's probably earnings. I don't know. Honestly, like I said, this is raw. Maybe it was earnings, maybe it was something else. But as soon as this market opened above 51, it broke above resistance, and as long as it held above it at the end of the day, this resistance level was broken. Once 51 was broken, we had expectation to see a 53. So now 53 has been broken, and now we're gonna have to move forward in the charts to see where to go. See, right now this is a lot of emotional buying on this white candle. Very emotional. There's a lot of buyers really committed to this market, especially with the gap up. So you definitely wouldn't want to be shorting it right now, but I don't really know if I'd want to be buying. I probably, if it would have break above 53, I definitely would have wanted to been buying. But with it this high and reaching 56 and then selling off a bit, I'm not sure if I would be buying. I haven't looked at this chart, even though I did move it back. I really didn't look at it, but I would like, to see this market do a sideways movement or something before it moves back up. Sometimes you hear that pullback or whatever. So let's just keep going, keep going, keep going. Alright, so it seems that on this gap up day, maybe it was earnings, maybe it wasn't, the resistance level that it hit was 56. And then we can see that, let me get this, and we can see that it's retested 56 again and failed to break above it. If it breaks above 56, see what's going on is this big bullish day, it reached up to 56, but it couldn't close above 56. It means that there were sellers at this 56 level. Either they were profit taking or even some shorts. The market moved sideways for some days. Didn't really do anything. There looks like more buyers came in a flat day. Then it looks like more buyers as well. And then the next day it moved up above 56. So I moved up to 56, retesting this seller resistance level. So if it moves above 56, all the people that shorted, they're gonna want to get out, and those people that maybe people bought at this low on this white candle, and when it went all the way up to 56, 52 to 56, maybe they took some profits, so they pinned some profits at this level. Now if it breaks above 56, those people that pinned profits, well, I sold it at 56 for a profit, and now it's moving above it, definitely another time to buy. So they will be buying along with short sellers covering. When that happens, the market it moves up. Now let's see if that happened. See, market side trend a bit more. Okay, looks like it moved down. and then boom. Okay, the market just moved down maybe sideways to a little slight pullback. Then it broke above 56. So like I said, all the people that shorted under the 56 or here, they were all losing money as soon as it broke above 56. So the shorts covered their longs by buying, and then people that nailed profits around this area, they bought as well, which is the expectation of high prices. So we'll see what happens to this. Okay, we can see the next 2 days it tested 56 as support, old resistance becoming new support. And we'll see what's going to happen next. Usually when I see this type of price action, this is just from experience. Prices usually actually move down under this 56 level, maybe to this gap, before they continue up. I could be wrong, but from what I've seen in my experience, that's generally what happens. Let's see. No, looks like 56 is holding. 56 looks like it's holding as support. Came back down a couple. Wow. So now our next resistance is 58. Can you see how each time it's 58 level has been tested 3 times already? So the market has broken up above resistance. Now there's some buying into it, but now there's some sellers at the $58 level. Now the sellers are like, hey, let's sell short at this level, prices are too high. And if prices break above 58, those short sellers are going to lose and buy back their shorts and move the market up. But I still stick to my experience. I've seen prices even pull back under the 56 level. Let's see what happens. Okay, prices broke out to new highs. They broke above 58. All the people that wanted to sell short in this area right here, all these traders that sold short, they lost money as soon as prices moved above 58. They covered their shorts, which means they bought back their shorts, and that created bullish momentum along with buyers. And you see how it's moving up. So resistance was broken, resistance was broken, resistance was broken. That's generally what happens in an uptrend. We can continue this more if you guys would like. We can just see what's been going on. Okay, continue to move up. It just continued to move up. Now when I see this flag pattern, or what the type of move up flag pattern, and then another move up, this is a very strong move up. It actually went from what, 58 to 61, 70 in about 3 days. That's type of bullish exhaustion. I wouldn't be expecting this thing to move up. If it moves up, especially on high volume, that'd be a bearish signal. But I'm expecting, because of a lot of this, more sideways movement under a type of resistance level or pullback before it continues up higher, if it does continue up higher. So we'll see. Alright, well, if you know candlestick signals, this black wrapping around the white candle is a bearish engulf pattern. Prices try to move above 62 but failed to do so. Now if you know about candlesticks, the high of the bearish engulfing pattern is resistance, because this black candle shows that sellers were in charge this whole day, and they sold prices lower and actually erased bullish gains from this candle and half of this candle. So you have a bearish engulfing pattern at 62. That's resistance. So, like the old thing that I've been saying, if prices pull back or move sideways, more sellers are going to come in under the 62 level. Now, if prices move above 62, those sellers that shorted, like on this candle, and if it pulls back, those sellers that shorted, they're going to be losing money when it breaks above 62. So that means they're going to buy back their shorts, keeping up another rally, move up higher. And longs are going to say, hey, the market's moving up higher, it's breaking above 62. See, people who bought maybe on this candle, or people bought there, they see that prices couldn't move up above 62, and they might want to take some profit. So longs are taking profits at 62, shorts are shorting at 62. Now, break above there, the longs that took profits are probably going to come back into the market, and a break above 62, shorts who lost money will buy back their shorts, sparking another rally. So let's see what happened with price. Okay, just move sideways. We have a move up, small body candlestick above. It couldn't get above 62. There was really no momentum. So we'll see. Small real body. Looks like prices tried to get above 62, even 62.5, and couldn't for a false breakout. So you could say the high of this bearish engulfing pattern is resistance, but I would like to I would have to spike it up even higher to around the 62.5 because it seems that prices are trying to get above it, but they couldn't. And that's actually more important resistance level. This could even be a shooting star type of candle. We'll see what happens. Okay, just side trending. So the last 4 days, actually 5, have just side trend. That's still a bullish sign. And then let's see, the market's moving down. We got a white candle. We got some volume trying to pick it up, the bullish momentum, and we have new high. So most likely all the people that shorted here losing money, and they're buying back their shorts and moving along. You can tell this candle, even though it's a small white, it opened with a gap up. So most likely prices are going to continue up higher, and they reach 65. Maybe they're going to go out 67.50, close there. And that's one way I want to show you guys how I look at support and resistance, especially in this case, mostly it's resistance that I look at when I look at charts. And that's a skill that everyone has to build on their own. But once you learn that type of skill and you see and you understand psychology behind the market, it gets easier. So I hope this helps. I will be creating new videos, and just give me any feedback if you have any. Thanks.